Welcome to View from the Top at the Council on Foreign Relations Corporate Conference here in Manhattan. And I'm joined by Jian Xin, who is the founder and chief executive of Soho China, one of China's largest private sector property developers. Jian, thank you very much for joining me. You're obviously here in Manhattan for a few days, where the property market's still depressed. China is a very different situation, and the authorities there are taking measures to try and repress it. Could you talk to us a little bit about the real estate and the broader inflation, macroeconomic problems facing China?
Well, up until last year, you were reading a lot about China, real estate bubbles, empty buildings, ghost towns, and all that, right? And since then to now, really things has dramatically changed, because the government introduced these harsh measure of not allowing people to buy more than one homes. So the result is that the market has been frozen. That is on the residential side. And if you look at the office, which is what we do is to build office buildings in Beijing and Shanghai, where in fact the market has never been as hot as it is now in terms of rent. Rental has gone up so much, vacancy is so low, so actually the market is calling for more supply of office buildings. But then because of the intention of the government of trying to control the inflation, therefore have a very tight credit, it's very hard to borrow money, and therefore not many people buying land. Even though the rent has gone up so much, the vacancy is record low, still the supply of the office buildings are not coming up so strong.
So from where you're sitting or standing in your sector, how are the authorities managing the anti-inflation drive?
Well, you see, when the government had the stimulus package right at the financial crisis, this flood of money came out, right? And then a lot of the money did go to real estate. So then when the government realized that the housing price was going up too fast, so fast that it's created the public discontent. So they did two things. One is not allow people to buy, and second is to come up building a lot of low-income social housing. So then they froze the real estate market, right? So then what happened is the money is still coming out a little bit, but they restricted that no money goes to real estate. It can go to other places. But still, even the money goes to other places quite tight. Most of the money, still up to today, went to government-owned companies. Railways and airlines and power stations all got a lot of money.
There's been a lot of speculation recently that China's growth is going to slow sharply, and obviously the official number, the official forecast has been brought down to 7.5%, I think, by Wen Jiabao. Is this an expectation you share? Because often they lowball the projections, right, the authorities. Do you think China is slowing? Are we moving into a new phase?
The current slowing is really because of the tight credit. If you as a company cannot borrow, if you want to start a new business, you cannot get money, then it's very hard for economy to grow. So I think that now that the inflation is quite under control, the government actually is in a position to relax and to encourage the banks to lend more, to allow the banks to lend more, especially now that exports seem to suffer quite a bit. So they have to allow the Chinese domestic development, economic development, to continue.
It's been a pretty extraordinary last 2 or 3 decades for you. What would you expect the next 2 or 3 decades are going to show? Where's China going to be 25 years from now? What's it going to look like as a country?
Well, it seems like if you look at the last 30 years, right, no recent history with humanity has seen such a fast growth with such a big high number of population. I think China's GDP doubled 3 times in that 30 years time, and that is carrying 1.3 billion people. So no economy has seen this much growth and change, and you can just imagine that this rise of China is so strong that the short-term worries that we have on policy changes, political changes, personnel changes, are not going to be fundamentally steer away from the rise of China. So if I were to look ahead 25 years from now, I would certainly expect a much stronger China, more powerful China, economically richer China. Although compared to the US, because of our population base is so big, you will still have a per capita GDP much lower than the US. Actually, the world will be the first time seeing soon, right, if China's aggregate GDP total is bigger than the US, we'll be first time seeing a country that has the largest economy and yet not very rich.
I have to also ask you, and time is short, but your perspective on America right now. How do you perceive the American story from Beijing, and how do Chinese in general perceive this competition, supposed competition between the US and China in the 21st century?
I don't think for the Chinese there's such a sense of competition.
Or rivalry.
Rivalry, no. I think most Chinese are still seeing America as this, amazingly perfect country that is, good at everything. Great natural resource, wealthy, super political power, democracy. Everybody has, immense freedom, and that's still what the majority of the Chinese sees America, and certainly don't see America as a competition for China. I do hear on the American side that seems to be seeing China as a upcoming superpower, as a country to compete.
Do you think Americans are misreading?
Americans, I sense more of the fear of the competition from China. But I don't see so much in China.
But do you think the Americans are misplaced to have that anxiety?
No, I think it's very normal. If you're the best, you're always aware of who is the second and coming up. If you're the second, you just want to catch up.
So only the paranoid survive. It's a healthy sign.
It's a healthy sign.
Well, thank you very much for sparing the time.
Thank you.